Really watching it aggressively over there, isn't he?
He will after this one now.
Yeah, exactly.
All right.
We are live. What is up, everybody? Episode 11. I was just telling people that we've hit double digits in the pickers market and I haven't been fired yet. So I must be doing something right.
So far.
We gotta tread carefully.
I don't know how far. Yeah. It relays into our guest today because, you know, the one that could probably do that to me. We have got special guests. We've got our first go around. Some would say it's massively overdue. He would, I think.
For sure.
We got Mike Binger in the house. Mr. Binger, how are you doing, sir?
I'm doing great. I feel privileged that it took only 9 issues to get me on here. Or what did you say? This is 11.
This is 11.
Okay, good.
Yeah,
All
well,
right.
you know, we had to get it right before we bring the boss man on. So
Good.
you know, we
Love
got to get feeling good first. Well, welcome, sir. It's a pleasure to have you, Mr. Gangl. As always, it's a pleasure to have you. We got Tyler on the other end here, so we got everybody in house. Well, not everybody, but we got the A-list roster here going on right now. Binger, Keith, I want to hear from you. You know, I was calling you Broadmoor Binger and Colorado Keith. Can you tell me why I was telling you that?
Yeah, go ahead, Mike. Start.
Yeah, you know, every year, Gradient Financial Group throws one of their meetings. It's called the Gradient Gala, and it has the top 200 FSPs or advisors are there. A lot of them bring their family, so it's gotten to be an annual event, and it's really fun. And I know our advisors and FSPs all look forward to it. They you know they tend to bring their kids and family. We saw a whole lot of that there. You know, they get to relax a little bit and do some fun activities. But we also have a couple of business meetings where they you know, they learn some new things, they get a little market update. But overall, it's just a great trip. It's 4 days. It was in the Colorado Broadmoor this year. I'll let Keith tell you a little bit more about the resort itself. But, you know, I would say this year, you know, the advisors were all excited. A lot of them had their families. It was a good time had by all, but it was also a worthwhile trip because to really, you know, you network, you feel closer to the advisors, and it's just a lot of fun.
Yeah. How was the venue?
Yeah, the venue's fantastic. It's beautiful. I don't know how many acres. It must be couple hundred acres, I believe.
I feel like the Broadmoor owns everything in Colorado
Springs. It's the longest running 5-star hotel in the U.S. So it was beautiful. The weather is gorgeous. You know, I like hot weather with 85 degrees almost every day. So that was gorgeous. You know, Mike and I actually did a little zip lining, got a little adventure. So that was kind of interesting. It was fun.
Went with a group, did some zip lining, walked across some, I guess they're called suspension bridges.
Oh, you did?
That was a little nerve-wracking.
Yeah, How were the knees? Were they buckling?
It does, you know, it shakes a little bit as you walk across there. I mean, obviously you're strapped into a cable above there, but I certainly wouldn't want to be hanging from that cable, you know, I don't know, 700 feet in the air or something like that. Wouldn't be fun.
No, I don't think advisors would want to see me crying. So
there was a few people that had to pull off a few trees to get them going on the zip line. It was good. It was good.
Yeah.
Well, good. You know, I mean, Binger, I echo what you said is, you know, from the side of them getting together, being able to talk to one another. I think that's just cool. Like, right. They get to see, you know, they're grinding just like we do every day, right? For the most part, but they're grinding differently. They got to deal with you know, client issues and the things that come to them. And so to be able to get together and talk to each other, I think that's one of the better things we do is to allow them that ability to talk to one another, get ideas, get things like that. I think that's good for us.
Well, these guys aren't big wirehouses either, so they're not officing with other advisors.
Yeah.
So I think it's good for them to share those ideas, because when you're kind of isolated by yourself, you kind of do what you know. Yeah. And you don't really hear about anything else until you start talking with some of these other advisors.
Exactly right.
So it's a perfect opportunity.
You're exactly right. I mean, they, you know, and they've all been going to this, you know, to the gala for years. You know, a lot of them have been going for, you know, 10, 12 years in a row. And so they look forward to it. And they're, you know, it's like they're going to see their friends and colleagues when they're there.
Yeah, they bring their family, which is kind of neat to see, and you see their kids, the friends of other, advisors. So, and they're looking forward to their annual trip to see their friends of.
They've probably seen their kids grow up.
Yeah,
they're coming in when they're 5, and now they're going out of high school.
Now they're in the bars.
Yeah, exactly.
And there were some, great topics there. I mean, it's always nice for me to give a market update after the market's had a great 18-month run.
Yeah.
But Katie Grenderland and Luke Lowen talked about artificial intelligence. Enhanced planning was hit, so a lot of people thought, I'm really going to start incorporating that into my plans. AUM is a big topic. I mean, people really, as their AUM levels get higher and higher, they just feel good about that recurring revenue. So overall, it was a good meeting.
Yeah.
Love it. Well, speaking of AUM, Mr. Binger, one of the reasons we brought you on, not only for your entertaining personality, but we crossed a pretty big milestone here. You want to give us a little scoop on that?
We did, and I actually mentioned this in my market outlook that in the past year we've not only surpassed the 5 billion in AUM level, but we've just recently passed the 6 billion in AUM. So it seems like it's $1 billion coming every year, which is great to see. So we're really excited about that. It's just another milestone. I mean, I remember when I started in 2012 and we were about 200 million, thinking like, boy, if we could ever get this thing to $1 billion, that'd be awesome. And here we are sitting 12 years later at 6 billion.
Yeah, I was going to ask you that very thing. Is like, how does it feel to just hear 6 billion when you came in? And that just had to be like the furthest thing from your mind.
Well, I mean, it really was. I'm not going to say it was a pipe dream,
right?
But it just, it just seems that number seemed unfathomable at that time.
Yeah. So I mean, we all came in when it was right around $1 billion, right?
Yeah.
I mean, you came in a little over that.
1.8.
1.8. Yeah, I came in when it was 1.1.
Yeah.
So
my first week, we must have crested 2 billion and then popped back down. So I came in at 1.8, and my first week we had a $2 billion party.
Oh, nice! Look at you.
My first week I got here is a $200 million party. We were at
right. Those parties might be a little different.
It was a $200 billion party. It was at Fogo de Chao downtown.
Oh,
it was a dinner. I think there was like a dozen people, maybe 10.
Nice.
And it felt good. And then here we are. We're going to have a $6 billion happy hour
next week, right?
Next week. A couple weeks. Yeah.
2 weeks.
Yeah. Fogo de Chao. Ooh, that'd be a meat sweat party.
That would be a meat sweat.
Be a tough one. Be a tough one, especially if it was my first week. I'd be like, "What's wrong with this guy?"
Yeah, we used to celebrate every 100 million, but I mean that that comes so fast now.
Yeah,
well, we can go back to that.
Yeah, if you'd like. Yeah, certainly wouldn't mind. All right, let's switch to some financial topics here. Let's have some fun. We're going to talk about the hot button here, and I think the hot button for us is. This maybe falls under a little bit of nerding out and a little bit of hot button, a little bit of everything. But, from our side, wages versus inflation. And I think most people, I mean, we've certainly harped on it. You certainly hear it in the news about inflation's growth and all of the impact that has had. I don't believe people know as much about the wages story on the other side of that. Part of it being that it's partly causing, but partly also there's an offset to some of those higher prices. And one of the things that I saw here last week was for the last 13 months, wages have actually been growing faster than prices. So Tyler, from your side, how does that kind of, yin and yang, if you want to say, or something, or that balance kind of work? And why is that important to us?
Well, I think part of the reason people don't feel like they're keeping up with inflation is because you see prices go up on a weekly or a monthly basis, and most people get a raise once a year.
Yep.
So I think they're feeling the pain as prices go up, and then all of a sudden they get that raise that helps them afford what they need to. Mm-hmm. So I think that's where the yin and yang comes from, of people saying, well, I'm not getting that kind of raise, that prices are going up, right?
Yeah.
And there's also different factors within inflation, that some things are rising faster or higher than others at different times. So depending on what you're buying, I think you're going to have a very different feeling about where your wages versus where prices are.
Yeah. Yeah. Binger, when we're looking at consumer sentiment surveys and all that stuff, it's generally, considering what I think all this table would say, we've had a pretty good economy, stock market's at all-time highs, right? Hey, you should probably be feeling pretty good. Sentiment surveys would suggest the otherwise. Do you think it's primarily inflation is the reason why?
I do. Yeah. I think, well, number one, the U.S. consumer tends to be a little pessimistic anyway.
It's our natural state.
Yeah, it's been good, but next week's going to be bad.
Yeah.
Right. So, but I think Tyler makes a great point is that depending on who you are, I mean, if you rent, it's gone up a lot. If you had to buy a car in the last few years, that's been there, and everyone knows insurance. So it's the everyday items, I think, that inflation has hit. But the biggest question I get all the time is like, look, we've had big problems. We've had inflation. We've had interest rates going up. And I'm just shocked that it still hasn't killed the economy. And the reason why I think is because just what you're talking about right here is that even though you don't see it all the time, you feel the price increases go up, but we have more money to pay our bills that have gone up and to buy the things that prices have gone up on. So for the 2/3 of the people in this country who are working, they've kept up and not with inflation, but actually they've actually beat inflation as far as wage growth. So I don't think they're hurting as much. And I think that interest rates have gone up are helping that other third who aren't working. They're actually earning a little more money now or income on their investments or bank accounts and those kind of things. So I think those two things have kind of kept the economy going and kept us all spending.
Yeah. Gangl, from that side, what Binger just hit on is interesting to me from the perspective of just knowing where wages have been growing and where costs have been accelerating. Where do you think that's been the most painful? Like, who does this hurt the most? Who does this hurt the most versus who does this help the most?
Typically, this inflation, especially for the stuff you need every day, is the price of oil and food that's gone up. Right? If you go back to 2022. Inflation was at 9.1%, right? So, and even now the inflation's come down, at 3%, it's still at an elevated level, right? And so anything that you're buying on your daily goods, what Tyler touched on is your gas, your food. So you basically, your person that's got less discretionary income on the lower end of the income spectrum, that's the person that gets impacted morally. So those are the people that, a lot of people I know, a lot of blue collar friends, it's like, they drive a lot, right? So when gas prices are up, they really, that's one of their sticking points.
Well, their business, right? I mean, they're going to, they're servicing my garage door or something like that, where they've got to drive to the thing. It's not like, they can zoom into my garage door.
They're not working from home, so that's the kind of worker that's getting pinched a little higher and the inflation rates.
I think the paycheck to paycheck, right? I think and I've always said with inflation, inflation feels like your last grocery store or your last gas station purchase, right? That's how you'll feel, right? If it's more expensive, you don't feel great. If it's less expensive, you maybe feel okay, but you probably never feel good. Like people always think higher or, inflation coming down means things are getting cheaper. It just doesn't work that way.
No, prices still go up. They're just not going up as much, right? I mean, a couple of years ago, if you bought a loaf of bread for $2 and now it's a year later, it's $3. And then the next year it's $3.20. I mean, they're going to say, "Oh, inflation's under control," but it's still a lot more expensive than what you bought 2 years ago. Yeah.
Tyler, on the wages side, I think we all hit on this a little bit. Is that I have blue collar friends too. Like that tends to be my buddy group, and most of those guys would say that wages stuff that you're talking about certainly ain't me. Yeah. Who has been, in your opinion, or in the work you've done, whose wages are growing faster? Whose wages are growing slower? Have you seen any of that data?
Yeah, I mean, the BLS, the Bureau of Labor Statistics, they release every month. They release the average hourly earnings for different categories, and now you can't really look into like sub industries really, but they kind of break it into broad categories, right? Yep. So one interesting one that I found was manufacturing of durable goods, like cyclical things that we buy, like vehicles. That's actually the fastest rate raising wages there is right now.
Well, I think United Auto Workers got a pretty good raise.
That probably skews a little bit.
That might skew it. But then you've got financial activities are doing well, transportation and warehousing. So, what is transportation and warehousing? Kind of a very broad category. One area where I thought is kind of what we were just talking about is more that paycheck to paycheck, more of like the extra job type of or second job type of worker.
Side hustle. Look at me, I'm so young.
Is like retail trade.
Okay.
Like retail. That's actually one of the lowest wage increases last month. So I mean, you're not only are you having certain areas of the market doing better or of wages doing better than the others, you're also having certain areas of lower income jobs now raising the least.
Yeah.
Which I think might cause an even bigger issue in maybe a year or two as those wages, maybe if they don't keep up.
Yeah.
I think that's when you can really start to see an issue on some of that lower income.
I wonder if how much that's comparison though, because really, if you think about it, like last year and a half, Target, Walmart, you saw those numbers start going up aggressively, right? They went from $12-13 an hour to 15, 16, 17, 18 pretty quickly. From that side, I wonder if now we're just kind of stabilizing that because prices aren't going up as fast. I can't pay my people as much anymore because my margins aren't going to look very good.
Well, I mean, if we look back to like, here, I've got my spreadsheet here.
Oh boy, he's deep in the weeds now here.
I don't want to talk about it too much just because it's, listeners don't have any sense of what I'm looking at. But like if we start to look back towards just post-COVID, of certain areas that did really well, retail trade did extremely well in wage growth.
Got
it. They had enticed
incentivize
their workers
people to get
come
in
back,
there,
right? And same goes for leisure and hospitality. Leisure and hospitality at one point had almost a 14% year-over-year wage growth. That was far surpassed any other category.
That's crazy.
Right. But now you're starting to see that come back down a little bit more into the normalized range of 3.5% to 4%.
Yep.
So I think some of that I think was factored in, but now you're starting to get to a point where they're probably starting to feel stretched again because inflation has remained somewhat elevated.
Yeah. I mean, I think that's, as inflation comes down, I think wages are going to come down with it. I think that's pretty much the general sense is that spread won't get wider and wider. It'll end up normalizing itself.
It seems like though recently, like inflation's been around 3 and wage growth has been around 4 or 5.
Yeah.
Yep.
So it's workers still seem to be winning a little bit.
Yep.
Yeah.
Well, I think another just quick point on that. One thing that a lot of people probably don't know about is there's a statistic that shows the number of jobs available to the number of unemployed persons.
Yeah.
Historically, there's been more people looking for jobs than there are jobs available, right? So you kind of have to take a price cut on your wage, or you just don't get as big of a raise as you might have thought you would by switching jobs. Right now, there's more jobs available than unemployed persons. So there's still a lot of flexibility in the workplace for folks to switch jobs and demand a higher salary because companies need to fill that role at some point. And so if you have the right background to fill that, you can probably demand a higher wage increase or raise from your previous role. So I think that's also feeding into this, showing that if you switch jobs, you probably get a raise of maybe 10 to 15%, whereas historically you probably got 5%.
Yep.
Gotcha.
So I think that's another part of it too.
No, makes a ton of sense. All right, we're going to pivot here. I want to talk about a segment called Wait What, which is weird stuff. It's really kind of how I'm going to put it. So I saw this the other day on X. I cannot say X. I always want to say Twitter. I feel like we should just continue to say Twitter, even though it's changed its name.
I think you should still say Twitter.
Everywhere says X in parentheses, formerly Twitter.
Oh, okay, gotcha. That's just too many syllables for me. I'm just sticking with Twitter.
I've never heard anyone say that.
I was actually in
any article. That's what they said.
I was in a meeting yesterday with HR with some new employees, and they're talking about this and that. And then on the board, she goes, "Twitter, Elon Musk." I'm like, it's not Twitter anymore. She goes, "Oh, really?" So there's a few people that aren't even aware that switch names. So to Binger's point, I don't think too many people are referring to X.
Well, I think this is us being Minnesota boys, the artist formerly known as Prince. This the stage we're in now. Can we just go back to Prince? Can we just go back to Twitter? So anyway, I saw this on Twitter because that's what I'm saying. So Microsoft, Nvidia, and Apple, as we've talked about incessantly here, all of those are over $3 trillion in market cap each of those companies. So each of them are over $3 trillion. The entire market cap of the Russell 2000, which is 2,000 smaller cap companies. So you aggregate all of those 2,000 companies together, their aggregate market cap is 3.02 trillion. So what that says to me, very simply, is 2,000 companies don't add up to one of each of those three firms. I think that's crazy. I mean, I didn't go back historically. I should have. I should have done more homework here to see if that's ever been the case in multiple timeframes, but it just seems like to me that has not been the case. Gangl, would you agree with that seems crazy to you?
Oh, for sure. I mean, just the rapid move of keep on talking about Nvidia up to 3 trillion actually being the largest market cap is crazy. I mean, just I mean, I think that we talked in the past. I think the total market cap's around 54 trillion of the total all stocks. And then you put in perspective that it takes the bottom 2,000 is only almost 3 trillion.
Yeah.
That's kind of mind boggling that it's going to take 2,000 other companies to equal one of these mega guys.
Yeah. Yeah.
And just the importance of, then you put that in how important that is to the overall stock market, right? I mean, so it's like if you get a call right on one of the big three, that's almost just as important as making a call on 2,000 names. Seems a little strange.
I mean, and again, maybe in history, maybe, when like the energy companies were as big as they were and that kind of stuff, maybe that was the case then. I'll be interested to do that work, but I've had a hard time believing it.
Yeah.
Well,
I think the biggest of the bigger, the
concentration
biggest
was
now.
never this high though. So
No.
I
I think you're right. Yeah. The
Right.
concentration is narrower this time. I mean, in the past, you've had the Nifty 50 and biotech bubbles and, the internet bubble, certainly in the 2001 timeframe. But generally, it was broader names.
Yeah.
You had 20 or 30. Now you have 3 or 4.
Right. And they're just so big now.
Mm-hmm.
Yeah.
So Tyler, we talk a lot about small caps versus large caps. Basically, if you haven't been in large caps, you've been underperforming, right? I mean, I think that's a way to put it. When we talk about small caps, you hear a lot about interest rate effect on small caps. Can you kind of walk us through just quickly why that's the case?
Yeah, well, when you think of a large cap or just any company in general, in order to fund operations, generally speaking, you either have to be able to produce the cash to do that, or you have to take out debt, right? Larger companies have the ability with their balance sheet and the amount of cash that they can generate to be able to pay for any of the capital expenditures that they have.
They can self-fund.
Yeah.
Right. Yep.
When you come to a smaller company, a lot of these small companies don't necessarily even have earnings to begin with, right? So they have to take on more debt to be able to fund themselves to continue, because the idea with a small cap is they fund themselves with debt for a while and then become profitable and then pay off that debt over time, right? So when a smaller cap company has quite a bit of debt, higher interest payments means there's more of their ability to fund themselves has to go towards the payment on the debt rather than funding R&D, SG&A, whatever the line item might be. More of that money has to go towards paying off the debt and interest versus actually being able to do something that could generate profitability for the company.
Yeah, I think the bigger thing, like you said, they can't fund themselves.
Yeah.
Right. I mean, that's really why interest rates, they have to go out and borrow, or they have to go borrow, or if they dilute their owners and go do a stock issuance. Right. I have to fund my business going forward. I'm small. I want to be bigger in the future. I got to go to the debt markets to do it. Interest rates make that more expensive. Rising interest rates make it much more expensive.
And going from 0 to 5.5% is a significant
is a big change. Yeah. Gangl. So one of the things I also read with this piece was the spread between large cap and small cap valuations are near historical highs, right? What gets small caps working again?
That's a good question. I mean, because it's divergences, so the overall S&P, the large cap names are around 21 times PE, small caps are anywhere, depends on what index you're looking at, 13, 14 times. So that's a big spread. And at some point then that will converge. You and I are firm believers of, reversion to the mean. Yeah. But when is that going to happen? It's going to have to take, I think, the economy the economy is growing this last year a lot faster than people thought it was going to do. Now people are worried about a slowdown. So generally speaking, that's not the area you don't want to own small caps. So if interest rates are still high, so we need interest rates to start coming down and the economy, I think, to reaccelerate. I think that would be the case was when small caps start working and large caps kind of sell off a little bit and kind of the broadening of the market everybody's been talking about. I think that would be the best case scenario.
Gotcha. All right.
I tend to think it's going to be when viable competition comes into the AI market. Yeah, I mean, I look at these names and they all have AI bubbles right now. And there's some other names, but I mean, NVIDIA is the big player here in AI. And I feel like we're probably a year away to where there's other companies that are going to come in and start to steal some market share from NVIDIA. I mean, that market is going to continue to grow quite rapidly, I think. But right now, there's just only one player that everyone's going to buy chips from in artificial intelligence. When we get 3 or 4 or 6 players selling chips that are kind of equivalent and they catch up to NVIDIA as far as product, that's probably when this thing
But do you
bursts.
think a small cap company is going to displace NVIDIA? I mean, I don't see a small cap semiconductor
No,
company.
but they'll be like AMD or
smaller than
you know,
NVIDIA.
Microchip or
Yeah.
other people other people will develop this, you know.
No, don't disagree.
All right, I'm going to put you 3 on the spot here.
Mhm.
If I had $1,000 right now, given what we just said, right? The market cap of 3 trillion is the biggest it's ever been. That spread has been wider. The valuations are very, very different. If I had $1,000 today to put on the large cap versus small cap, what are you buying? Tyler, we start
For
with
what's your time frame? What did you say? How long we're looking out?
I got $1,000, man. You tell me the time frame. Give me the next 18 months. I want to make some money.
Fair. All right.
18 months. I'm gonna pick small caps.
Okay. You're gonna go with it. All right.
Yeah.
Banger, what do you got?
I'm going to stay with the big caps for the next year.
Mhm.
I think Microsoft and NVIDIA will continue to surprise. Apple, I'm not so sure of. You know, I know they're making a play into AI, and if anyone is a cash flow generating machine, it's Apple, and they'll surprise you.
Yeah, I actually agree with Mike on the spot. I think he's spot on, which surprised me. I thought you'd say a small cap because I know he's got a small cap.
He's got a
he's
small caps in there, doesn't
He's a small cap.
I
guy
want to
by
take
heart.
that, but as a general market bet, probably not.
Historically speaking, because I've looked at the analysis on this. Historically speaking, when you start to get rate cuts, small caps start to outperform.
Okay.
So if we are under the agreement that we'll get maybe 1 cut in December this year, and we'll maybe get more in 2025.
Yeah, I think part of that might be.
Yeah,
I think part of that might be the environment, right? Because when we're getting rate cuts, right, is when people are trying to support the economy, and then we're looking ahead. The next 6 months is these rate cuts are going to start doing it. I think you have to have, you know, I'm going to make this argument here. I'm probably taking large caps too over the next 18 months. Here's the reason why: is I don't think small caps work if we're in a decelerating economy. I think that those are going to be a tough situation. Nobody wants to buy those things if they think the markets are going to get worse.
But my question then is, what is a decelerating economy? Because estimates right now are still pretty flat. Maybe you go from 2% to 1.8.
Yeah.
But then, and this is just a shot in the dark when you start talking about 2026 at this point.
Yeah.
But 2026 is expected to be back up to around 2. So I wouldn't necessarily call it a decelerating economy.
I wouldn't call that zero. I would call that zero confidence in people knowing what 2026 GDP looks like.
But for 24, 25, and 26, if you can average 2 to 2.5% GDP or economic growth, stock market likes that.
Yeah.
So I mean, companies can thrive in that
I'm
environment.
sticking with my small caps.
All right.
Well, that must be the young versus old segment here. We had to throw that.
We
back in
did.
here.
Yeah, exactly. Right. He's outnumbered today. He is vastly outnumbered.
We're hearing more and more talk these days of NVIDIA going from 3 trillion to 6 trillion over time.
That's where it gets crazy.
I think that's silly talk. I think short term.
Yeah, we've talked about that before.
But
I
think about it. I
smaller.
mean, Cisco had probably an 80 or 90 PE multiple when it expanded
120
there.
at
120 at peak.
Mhm.
NVIDIA is only 30. I mean, why couldn't that go to 50?
But it's been 80.
Yeah.
Because you could argue the other side is NVIDIA's $20 number or whatever their EPS number could be cut in half from just a cycle change, right? Is that it's a different company. It's a chip company, not a software services company where it's more stable. Like those chip companies, we've talked about it before, man. Those things can get smashed from an earnings perspective.
I think for the next year, though, I mean, people are just going to continue to buy AI chips.
Don't disagree.
Yep. Cool. All right. We're going to pivot to the last thing. We're going to have a little fun here. So game 7. So we talked a lot about basketball here because you guys helped me out a little bit in enjoying that. So I'm going to flip it the other way because I know nothing about this. The big hockey game happened. Game 7. I know enough about that. That's about all I got. But I want to let you have some fun. So I know the all-time comeback didn't happen. The down 3-0. I know that didn't happen. Would that have been what would that have been the biggest story in hockey since what? I was trying to get a historical gauge of like, what is the last huge, like, kind of swept up the nation in hockey conversation? Because I mean, obviously a 3-0 comeback probably would have done something like that. What was the last one? What was the last one that everyone, that people like me would have started paying attention to hockey for?
1980 Olympics.
Yeah.
Is it that far?
Whoa, okay.
I can't think of any at the top of my head
Hockey
either.
just does,
yeah.
like there hasn't
Like
been anything.
not
that-
94 Rangers, man. Like
Well,
even I remember
Well,
that.
look at Jeremy Paul.
Well, that's my
Wow.
high school senior
Right.
year. We were in state. You know,
Yeah,
it was
yeah.
the one time where I was like, "Oh, hockey's kind
Hockey,
of cool."
that's good.
I mean, there's just never been that significant of a shift, I guess, or to get people to watch.
Did Gretzky ruin that because his scoring titles are so crazy that nobody's can
I mean,
come near that?
Alexander Ovechkin, I think, draws enough viewers because I mean he's now second,
Yep.
and he's fun to watch. And
Mm-hmm.
he's had some crazy goals in the past, but I think from a totality of like hype around NHL, I think the last, or hockey in general, I think the last was probably like 1980s.
It wasn't the year that you won the state title for.
No, look at that. We could bring it up again.
Yeah, exactly. You're right. Yeah.
Two episodes in a row.
When you play on the team that won it. Okay.
Yeah.
But I will tell you, for Game 7, it was getting kind of a lot of hype around, and my friends were talking about it and all that. That was the first full game of hockey I've watched all year,
Oh,
Okay.
nice.
and it was a good one.
It was a good game.
Yeah, it was a good game.
I mean, McDavid playing for Edmonton, that would have been the comeback, and him being I think the best player in the league right now. That would have probably added a little more excitement to you and your friends as well. I think.
Yeah.
So
Yeah, I'm sure. I don't know. There's nobody like chasing a record. There's nobody chasing like all time anything that in the 40 years is a long time, Tyler.
Yeah, I know.
I mean, even for an old guy like me, 44 years of not lack of
Yeah.
excitement in hockey, that's brutally
I
long.
mean, not a lot of people just watch hockey though,
Gotcha.
unless if you're in Canada or Minnesota.
yeah, you need another superstar, and McDavid is on the cusp of that. And I think he could have, if they would have came back and
Yeah.
he would have scored like 2 or 3 goals in the game. I think that could have been.
I mean, he's
kind of
been
a-
labeled as the next one,
Yeah.
Gotcha.
right? Because Gretzky's the great
Right.
one. McDavid was supposed to be the next one. So I think if he would have won,
That would have.
it would have fueled that fire,
Yep.
and I think more people would have watched for the next season to see how he does.
Well, I'm gonna do shots fired at our neighbors to the north. How come they can't win it? How come they can't win a cup?
How come we can't either? I mean, state of
Yeah.
hockey, aren't we?
That's
Aren't we,
true.
aren't we the
State
state
of
of
I
hockey?
guess we should take
Yeah.
take as much
Yeah.
blame.
Wow.
But I mean, that's got to be just a sore spot in Canada. They can't get one. They can't get a title.
Yeah.
All right, last question on hockey, because I'm going to let you guys have some real fun here. I think Minnesota has a pretty soft spot for goons, right? Is goons still a good term? Am I okay using goons in hockey?
Goons are enforcer.
Enforcers now,
How
is
about
that what
that?
they're
Yeah,
called?
yeah.
Okay. Enforcers. So who's your favorite enforcer / goon? I just really like goon a lot more. Who's your favorite all time?
I'll start with this one. Jack Carlson from the North Stars. Anybody remember him?
Yeah, I do. Yeah.
Fantastic.
What
Big
years is
fart.
that?
He was like 79 to 84, 85. The reason I love him, he was a huge fart. They call him Killer Carlson at the end of his career.
All right.
And then I actually golfed in a charity tournament once, and he was actually in my group. That guy had hands as big as cinder blocks. It was just incredible. Just crushed the ball.
There was a guy on Chicago, the Secord. What was his name? First
Yeah,
name?
Al Secord.
Al
Yeah,
Secord.
Yeah.
He was one of my favorites. I liked
yeah,
him. Yep.
he was good.
See, Gordon Carlson.
And-
They're going back. They're in the way back.
And the
machine.
other, you know who Jack Carlson's brothers were, and what movie they might have been in? A hockey movie. Jeremy, you're a hockey guy.
I'm not a hockey guy. I'm a movie guy.
A movie guy. I mean.
Slapshot?
Yeah.
Are
His
they?
2 real brothers were in Slapshot.
They
They're
were.
the Hanson
Oh, really?
brothers.
Yep.
Yeah, so that's another reason I got a little soft spot for Jack.
Now you got me.
That's
Now
what I
I'm in.
figure. Yeah, figured I'd throw that in there for you.
Tyler, you got one?
I got to go with the Wild's Bugard.
Okay.
Bugard.
Oh
Yeah.
yeah, I
Growing
forgot
up,
about him.
he he had fight camps.
Yeah.
Okay,
Yes,
For,
he did.
even for like youth hockey players, you could learn how to fight.
gotcha. It's an interesting. Yeah, it's an interesting camp.
Well, they do.
Or
you
you could
yeah.
even go further back. Scott Stevens. He was
I
more of
know,
just
yeah,
a big hitter.
yeah,
I don't remember him.
He's Red Wings.
Yeah.
Oh, okay.
He's more of just a big hitter, but
Yeah.
The name I always remember was Probert.
Yep, he was
That's the name I always hear.
I did see a list, and his name was at the top of it.
Okay,
So,
that's the name I always hear when I hear about the toughest dudes in the NHL.
And it's kind of exciting. One of my buddies, when we were having a text thread going, he said, "Yeah, the Wild could really be in it. All they got to do is get about 10 more good players on the team, and we're right in there." Yeah.
your buddy nailed it on the
Yeah, I'm
analysis.
like, wow, okay.
Well, on that note, that positive note right there, I think we're going to hang it up. So, Binger, thank you for joining us
Thank
today.
you, guys.
Appreciate it.
It was certainly a privilege to be on with the investment team from Gradient Investments.
We'll definitely get you on before episode 50 again. You know, we'll
Awesome.
definitely get you
Okay.
back on.
Good.
All right. Until then, take care, everybody. Appreciate it.
It did end so well for him.